On January 8th, I was forced to sell my NIO shares because they were part of a... This is 100% true, and I'm about to explain to you what happened and why I was forced to sell my shares. But before I reveal the nitty-gritty details, if you're new to my channel, welcome. I share videos that show how I use my simple option trading to make a living. Okay, let's get started. So on December 31st, 2020, I decided to sell a covered call using some of the shares of NIO stock that I held in my portfolio. When I initially got the shares, my plan was just to use them as part of a wheel strategy, but as the price kept climbing higher and higher, I had delayed on following through with the covered call portion. And while I was grateful to see the stock appreciation, it wasn't part of my overall strategy for this particular equity. So I just needed to get back on track and follow through with my plan. Although this time, because of the stock appreciation, I'd be able to pick a higher strike price and therefore get a higher overall return on my investment. So now I'm going to jump over to my Robinhood account and show the exact steps I used to place the order for my covered call. At 1 month, NIO's down about 10%, but overall for the year, it's up over 1,000%. And as I jump back to the daily chart, I see that the price is still hovering around the same opening price. I'm going to start my order by selecting trade and then trade options. Next, I'm going to pick the January 8th, 2021 expiration date. And because this is a covered call, I'm going to select sell and call. And then next, I'm going to pick the $57 strike price. And then I specify one contract. And then I'm going to specify a 72-cent limit price. Next, I'll press the button to review my order. So I'm agreeing to sell 100 shares of NIO at $57 per share on or before January 8th of 2021. And I'm agreeing to use the 100 shares of NIO stock that I currently own as my collateral, which helps make this a covered call option contract. And in return for writing this covered call contract, I want to receive a minimum of 72 cents per share for the life of this contract in return for placing my shares as collateral. And so the 72 cents per share times the 100 shares means that I receive $72 as premium. The next thing I did was submit my order. It was received by Robinhood and it's placed. And then a few moments later, my order gets filled. Now that I've got the order placed, let's take a look at what the possible outcomes might be. So the first outcome is where the share price closes above my strike price. So my strike price was $57. So a closing price above my strike price, even if it's by just 1 penny, so for this example, $57.01, would result in outcome number 1. So my shares end up getting assigned to the buyer of the option contract. I get paid in return $57 per share. And I also keep the $72 premium. The other possible outcome, we'll call it outcome number 2, is where the market price closes below the strike price. So in this case, the strike price is exactly the same. It's still $57, but the closing price is going to be below the strike price, even by 1 penny. So $56.99 or lower. Just a quick side note. In actuality, if the closing price is $57 or lower, outcome number 2 will be the result. So here's what would happen in outcome number 2. The option contract would expire worthless because the terms and conditions of the contract had not been met. The shares that I had reserved for as collateral for this option contract would be released back to me and I would retain ownership. And lastly, I would still keep the $72 premium that I got paid. So where are we at now? So I've showed you my order. I showed you how I placed the order within Robinhood. And I showed you the possible outcomes. Now let's fast forward to the expiration day, January 8th, 2021, and show you what actually happened. So here's a daily chart for NIO Incorporated, stock symbol NIO. And let's zoom in on the date we're interested in, January 8th, 2021. As we can see from the candlestick on the chart, it was a green day and the stock price finished up. So let me zoom in and we could take a look at the details for that day. So at the opening bell, the stock opened at $57.76. And then during the trading day, it hit a high of $59.31. And then it hit a low of $55.88. And then at the end of the trading day, NIO Incorporated, stock symbol NIO, closed at $58.92. Because the closing price for NIO finished above my strike price, here's what happened. I was forced to sell my shares to the buyer of my option contract because that's what I agreed to in the terms of the contract. I received $57 per share for the shares I sold, and I still got to keep the $72 premium. Now I'll share with you the details behind the closing of the covered call option contract. I'll share with you my account history inside of my Robinhood account so that you'll be able to see the actual transaction details. So for my trading account history, we can actually see the entry that's used to document the closing of my covered call. I'll open it up so we can see the details, and then I'll zoom in so it's easier for you to see while I walk you through all of the information. We start off by saying that this is a call assignment for stock symbol NIO, and it closed on January 8th, and it's for one contract. And for the position, I was forced to sell 100 shares. And because this is a $57 strike price, you can see the credit that I received, $5,699.86. I guess Robinhood kept 14 cents from the transaction, but here's my total here. So my shares got assigned, and I received the $57 per share credit, which I agreed to as part of the terms of selling the option contract. Next, let's walk through the numbers revolving around this transaction to see if I had an overall profit or a loss. So I actually sold the covered call on December 31st, and the current stock price at that time was $48.74 at market close, and my cost basis for the NIO stock was $45. And so I sold one covered call option contract with an expiration date of January 8th, 2021, and a strike price of $57. Now the option premium I received was 72 cents per share, and if I multiply that out by the 100 shares, I received a total of $72 in option premium. And the premium in terms of the amount that I had initially invested, my cost basis, that premium, the $72, represents 1.67% of the cost basis. Now the stock appreciation was $12, and this is calculated by taking the option strike price of $57 and subtracting my cost basis of $45, and so that difference is $12. And now, using the stock appreciation of $12 per share, I'm now able to calculate how much I gained from stock appreciation from the sale of the 100 shares of stock. I take the $12 per share, I multiply that by the 100 shares I sold, and so the total appreciation gain is $1,200. In terms of percentages, that stock price appreciation of $1,200 represents a gain of 26.7%, which I calculated by taking the $1,200 and dividing it by my cost basis of $4,500. So my total profit from this trade is the $1,200 from stock appreciation plus the $72 I received in premium for a grand total of $1,272, which brings my total profit from this trade to 28.3%. And so yes, I was obligated to sell my 100 shares of NIO. That action was called out clearly in the option contract that everyone agreed to. So when the share price closed above the strike price, that activated that clause, and I was forced to sell my shares. So what do you think of this trade? Let me know in the comment section below. If you enjoyed this video, then do me a huge favor and please smash the like button below. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.